Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Brian Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch on technical levels in the Nasdaq-100. And Brian, we've been talking about this for the past couple of weeks as we've been going through the month of January. It really has been quite something, seeing these 2%, 3%, 4% swings on the Nasdaq-100, literally round tripping, and not just the Nasdaq-100, but all of the indexes. And of course, with the Fed out of the bag now too, certainly no shortage of volatility to the up or downside in the markets.
Yeah, absolutely. The worst index has been the small caps, the micro caps, the Russell microcap index, the Russell 2000. That started in November of last year, and in January of 22, we're now seeing that spread to the larger cap names, particularly in the tech sector, the growth sector. So the Nasdaq 100 also being impacted as well. And yesterday's FOMC came out. Just a week ago, on Wednesday of last week, President Biden had a press conference, and when it came to the topic of inflation, which has been a huge political topic, he reminded the country that price stability is the responsibility of the Fed. It's one of their two mandates. So accordingly, yesterday, Chairman Powell in his press conference, he was hawkish. It's similar to 2018 when the markets had a very turbulent time. The December of 18 was one of the worst months on record, going back almost 90 years. And that was when Powell was very hawkish. He was saying the rates were a long way from neutral. Well, yesterday, he, in similar fashion, said there's quite a bit of room for rates to rise without hurting the labor market. So I think the market overall clearly saw that as a hawkish move, a hawkish signal at the very least. The two-year Treasury yield went up almost 14 basis points. It was, if you exclude March of 20, when volatility was extreme across all asset classes, that was the biggest one-day move in the two-year yield to the upside since June of 2009. So a very dramatic move. If we look at the Fed rate expectations, there's now close to 5 rate hikes expected for the year of 2022. In just the start of the year, it was only at 3, and at the start of the fourth quarter, it was at 1. So markets are certainly, pricing in a more hawkish scenario. As of yesterday's close, the VIX closed above its upper Bollinger Band for the 7th consecutive day. That's only happened one other time in the history of the index, and that was the week of 9/11. That goes back to its inception in 1990. So there's extreme pessimism clearly across the marketplace right now.
Right. And if we take a look at the Nasdaq-100, Brian, with these swings that we're seeing day to day, what are the technical levels that you're watching right now? It's got to be a little bit challenging, if, when it moves 3-4% to the upside, the downside in one session for a technician.
Yeah, absolutely. The good thing about the technicals is, you can identify what your risk level is and, use that to, base your investment decision on. You certainly want to know what your time frame is going into that. But last week we were around 14,800, 14,850 on the Nasdaq 100, and we thought the downside risk was to 14,400. We hit that the very next session on Friday, and then we broke through that on Monday. Despite the volatility of the last 2 or 3 days, we haven't yet made a lower low relative to what Monday's intraday low was. And we can see here on the charts that the intraday low on Monday bottomed right around these prior highs from April and from January, February of 2021. So we've given back, roughly the last 11 months of gains in the index just in a few weeks' time, but we haven't yet made a lower low. And so that's, a net positive in and of itself. If you look at the weekly period chart, I do like the shape of this candlestick for now. We still have, the rest of today and tomorrow to get through. And Apple earnings after the close, then maybe that will have some sort of impact. But, this is what technicians would refer to as a doji, or a long-legged candlestick. And this follows 3 or 4 weeks to the downside, and it's taking place along this expected support zone right here. So, we'll have to wait and see how tomorrow unfolds, and then next week's price action for confirmation. But the potential right now, given the extreme move to the downside already, and momentum readings being deeply oversold, I think from here, it would be risky for, say, short sellers to continue to hold on for the next swing from here. So my bias in the short term is to the upside right now.
All right. And Brian, to wrap up here, of course, we have heavyweight Apple reporting after the close. Anything you can see from a technical perspective?
We have Apple after the close, and we'll be looking to see what they say largely about supply chains and how those could potentially impact fundamentals going forward. They do have a number of new products to speak about. Their GAAP EPS estimates have beat the street estimates of the last 12 quarters, and the street right now, the average price target on the stock is about 10% higher from here. So they have that going forward, going into today's earnings release. This is the chart that stands out to me for Apple. It's the relative strength of Apple over the S&P 500. And, we could see it's been a multi-year uptrend, at least about 8 or 9 years right now. And most recently in late 2021, it broke out to new highs. Given the dramatic declines we've seen in growth stocks and technology stocks, on a relative basis, this is holding up extremely well. You can see it's holding up its prior highs that were made in August of 20 and in early 2021. So from that basis, it looks very constructive. And if you look at the weekly period chart of Apple, it's simply just retesting right now the prior highs that were made in September of 21, trading above its 40-week moving average, which is synonymous with the 200-day. And if you want to look at price history and technical support based on volume, the volume and price bars here, we could see that even below Apple, the volume bars increase. And so, overall, technically, right at the moment, I think Apple looks, remains constructive.
All right, Brian, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.